Hey guys, this is Tim Smith. I am an Illinois real estate broker that specializes in multifamily apartments and have for the past 10 years been educating people about the Chicagoland apartment market. And this comes up quite a bit. Credit scores. Um, how do I fix my credit? What kind of score do I need? So I thought I'd make a quick video to educate some of the newer renters in the Chicago market, and also some of the older renters that maybe might be a little bit mystified by why their credit goes up or down, or how they can get a handle on their credit, and what landlords look for when they are viewing your credit, when they're looking at your application in order to make an approval and move forward with your application. So, and what you don't know can hurt you. It can hurt you. It will hurt you. The more you know, the better. Knowledge is power. That's the old saying. It's completely true when it comes to credit scores. And it's shocking how many people, old and young, have no idea what their credit score is and why it's good, why it's bad. And hopefully this will help you get a handle on that and give you some insights. So what is a good credit score? That's a good question. Credit scores, first of all, there's three main bureaus. So there's not one credit company. There's three. Experian, Equifax, and TransUnion. Now, typically, your average apartment company or property manager is usually just going to pull one of the scores, maybe two. But again, just be aware there are three of them. So, and this comes more into play when you go to get a mortgage. They're going to pull all three. It's known as a tri-merged report, and they will end up using the median or the mid score as your score when you go and apply for a loan, a mortgage loan, when you purchase a home or a condo. And then as far as the ranges go, I believe the lowest is 300, and the highest would be 850, depending on which bureau. But what's good, what's bad? So in Chicago, and I'm assuming this is pretty standard across most of the United States, anything under 600 it's basically a D minus, heading towards F credit. If you're in the 500s, that's just 95% of the people with credit have better credit scores than you, or 90% or 85, whatever it is. It's really not good. So and then that 600 to 660, 680 range, that's average. It's about a C in terms of a grade. Once you get to the high 600s, low 700s, you're getting into the range of say like a B, and then anything over 750 or 800, that's A plus or A credit. Some may argue above 720, 740, but the long and short of it is you need to be aiming for 700 or better. It's really not that hard. Even if you're in the mid 600s or the high 600s, don't pat yourself on the back. It's okay. I mean, it's not great. It's not terrible. Most apartment groups will take 640, 650, 660. But again, if you're trying to get into more of like a luxury apartment, or if it's a private owner that has a condo, or they live in the building, a lot of times they're going to want 700 or better. So what's a good credit score? 700 or better. Some people may argue 680, but that's just not true. I'm going to go 700, 720. That's a very good score. 800 even better. Try and work towards that 750 mark, which is where you want to be. So, how will this affect my getting an apartment? Well, it's going to affect it greatly. You see a lot of ads on TV that say, "Oh, you're more than a credit score," and that's true. You are more than a credit score, but when it comes to getting an apartment or a car or a home, you are your credit score. So, I don't want people saying, "Well, I'm more than a credit." Yeah, you are. If you have high income and, maybe you went through a bankruptcy, maybe they'll let it slide. But this is really important stuff. You have to get a handle on this. The earlier in life you get a handle on it, the better. So like I say, how will it affect it? If you're below 600, you're gonna live in a dump. I mean, you're gonna be living in a place where they're not going to be taking care of the building. They're probably not screening their tenants very well, so you're going to end up getting bad neighbors. There's a lot of other things you need to consider with that low credit score. Even if you do get approved at a 580, don't expect them to fix much. Don't expect your neighbors to be these A+ renters. You're gonna run into problems. So the other thing, people say, well, I can get a cosigner. Well, less and less companies are allowing cosigners. So again, how does it affect getting an apartment? It's huge. It's the number one. It's the number one factor when it comes to approval. Yes, income is very important. Probably that's the second most important, but I would argue the first, priority when a landlord or an apartment group or a management firm looks at your application, it's going to be your credit score. So it's hugely important. Okay, where can I see my scores? I get this all the time. I don't know what my score is. Where can I see my score? I don't know what my score is. Well, if you have a credit card in 2020, you can get your score online from your credit card. If you have a major credit card through Visa, MasterCard, American Express, they're going to give you a snapshot of your credit score. Now, it probably won't be all three bureaus. It'll probably be one, but it's still going to be helpful. It's going to give you a very good idea of where the other scores are and whether or not you need to improve. If you're in the 500s, you need to improve. If you're in the 600s, you still need to improve. Again, our goal is above 700, 750 to 800. It's going to help you in all areas of life. Like I say, not just renting an apartment, but buying a car, your credit card, interest rates will be a lot lower. Your ability to buy a home, if you're saving for a home, I mean, you need to have 700 credit. So where can you see your scores? If you have a credit card, you can see them on the statement, whether they print it out or whether online. The other places you can see them would be a very popular one would be creditkarma.com. creditsesame.com. These are free companies. There's no excuse not to know your score. All you do is put in your name, your address, your social security number, and it's going to spit out 2 of the 3 scores. And it's also going to give you recommendations for free. So again, no excuse not to know your score. And the government is also helping the consumer in terms of knowing their scores. A few years back, they passed a bill whereby you can get access to your tri-merge report. So you can get all 3 credit scores once a year for free. You go to I think it's annualcreditreport.com or myannualcreditreport.com, and they'll give you all of your scores for free. They'll break it down, and I believe it'll even tell you, you know, some of the things you need to improve that score. So, plenty of places to find your score for free and easy, and you should know your score. You should walk around knowing your score at all times. All right. How can I improve my score? Pretty easy. Pretty easy stuff. Now, there is a new credit system that's coming in 2020. It's going to be changing the way that the bureaus score individual credit. So they're going to put a little bit more weight on your debt ratio as opposed to your payment history. But the most important factors that you're going to need to consider when trying to improve your score is make your payments. Never miss a payment. Never miss a payment. You can be a few days late. They'll hit you with a late fee. Beg, borrow, steal. Make those payments. You have to make your payments. If you can't make your payments, you have too much credit. You have too much debt. You have too many credit cards. You don't have enough income, whatever. You need to make your payments. Very important. Now, this used to be the #1 factor. This next factor is actually going to move into position #1 as the factor that will be weighed the most, and that is, of course, your debt ratio. What's the debt ratio? It's your ratio dependent upon how much credit you have. Add up all the credit you have. So let's say you have $10,000 in credit card limit. And let's say you have a car loan, $20,000 car loan. You have a student loan. Add all that up, and that's going to be your credit, what's been extended to you. For the most part, the installment loans and the student loans are sort of their own animal, and as long as you're paying those on time, you're going to be okay. What I want you to focus on is the credit cards. You need to be at a 30% debt ratio or lower. What does that mean? If you have $10,000 in credit limit, across 3 cards. Let's say you got one for $3,000, another one for $3,000, and then one with a $4,000 limit. So that gives you 10. Well, what is 30% of 10,000? $3,300. You need to be less than 3,300, and it doesn't matter if you're carrying it all on one card or if it's spread out. It doesn't matter. As long as you keep that ratio under 30%, the likelihood of you being in the 700s is very high. So super important. Make your payments on time. Most importantly, don't use all of your credit. Keep it to a third. The other thing that I haven't mentioned yet, and it's a medium factor, or it's not weighed that heavily, but how many times are you pulling your credit? If you're going out and searching for new credit here and there, like 5-6 times a month, that's going to drop your score. It's usually 3 or 4 points per pull. If you're going to buy a car, or if you're going to rent an apartment, don't apply to three different apartments. They're all going to pull your credit score and you're going to drop. And if you're on the bubble at a 650, guess what? You're going to drop and then you're not going to get that apartment. So don't pull your credit more than is necessary. Probably only want to pull it a couple times a year. You don't want to be, going to the car dealership, going to the credit card companies. And what that signals to them is, hey, these people are in trouble. They need, uh, you know, they can't pay for their normal bills, so they're trying to go out and get credit cards. That's what it signals to them. Yeah, so don't do that. So credit card, and then another factor that's, you know, it weighs in probably not as much as it used to. We'll see, but is the age of your credit. So you're going to want to have at least, ideally 3, 4, 5, 6 years of credit history built up. Now, I know people aren't going to have that right away. But for the younger renters out there, who've been told don't get a credit card, no, go get a credit card. In fact, go get 3 or 4 of them. Just don't use them. Or you put $20 on it, pay it off. Put $50 on it, pay it off. Now you're going to build that credit. So you need to have a credit history. You cannot walk through this world without, you don't have to buy a car. You don't have to, do anything crazy, but you need to prove to landlords that you at least are responsible with your credit. So credit cards are evil when you use them, when you abuse them, but you need them. You still need them to establish credit. If you go get a car, great. That will establish credit as well. There's also a hierarchy in terms of what credit type is more valuable. I don't know how it's going to be with the new system, but a home loan always used to be number one. Then, which is an installment loan, then a car loan, and then credit cards would be sort of the lowest, on the lowest rung in terms of desirable credit. If you have a home loan, that's great. That's what the credit cards want, companies, they want to see. Obviously, this doesn't matter when you're renting, but just be aware when you move into that home ownership role, you're gonna want to be in the sevens. You're gonna want to have established credit. If you don't have established credit, you walk into that mortgage loan office with a 620, you might be paying a point or 2 or 3 percentage points more than your neighbor because they have a 750 and you got a 600. So it's going to cost you in the long run thousands of dollars. Go get credit cards. Use them, don't abuse them, keep them under 30% of the limit. So hopefully that makes sense. What do landlords look at besides your credit? They're going to look at your income. They're going to look at where you worked or where you work, how long you've been there. Is the company big? Is it a company they've heard of? Is it an employer they've heard of? How old you are. Obviously, they're not, ageism comes in, but they're going to look, are you 18 or are you, 45? They're gonna look at that. Do you have a lot of debt? Do you have a high debt to income ratio? They're gonna look at that. Even if you have a good credit score, that's 660, 680, that's an okay credit score. Well, do you have a $900 car payment? They're gonna look at that. They're going to always look at your ability to not only pay for your rent, but do you have enough income to cover your bills? How about your utilities? Can you pay your electric bill? Can you pay your gas bill? Can you pay your Wi-Fi or bill? Can you eat? You're going to need to eat every month. So, your debt to income ratio, how much debt you're carrying, how long you've been at your job. Is it a well-known company? And there's compensating factors. Look, there's divorce, there's bankruptcy. There are medical collections. There are some exceptions when your credit is not that great. If you're in the sixes or the 500s, but you have a very good reason, and usually divorce, bankruptcy, medical collections, those can, or sometimes student loans. Those can really hurt um, your credit score for all you recent graduates. If all you have on your credit score are student loans, you're going to be in the 500s. You'll be at 550. And it's unfortunate that they don't tell you that. Hey, I went to school, I borrowed this money, I'm trying to improve myself, make a higher income. Yeah, that's great. But you know what? You didn't open any other credit cards. And the only debt you have is student loans. So guess what? Your credit stinks now. So younger renters, renters right out of college, in college, grad school, you need to be aware of that. If the only thing you have is your student loans, you're going to be in trouble. You're going to have bad credit. So look for those scores. Make sure that you're paying your loans. Make sure that you're, above all, make sure that you're getting those 3, 4, 5 credit cards. It can be a gas card. It can be a Target card. It can be a Home Depot card. Just make sure when you go to that retailer or that bank, just make sure that it reports to the bureaus. I'm not saying you got to run out and get 5 Visa cards with $20,000 limits. You can get, you know, Visa or MasterCard cards from your retailers that you frequent. So don't feel like you got to run out and get a Visa. The other thing is, if you're in the 500s, frankly, you're not going to get a Visa. You're not going to get a MasterCard. You're going to have to start with what they call starter cards. Highly recommend pull your stuff at Credit Karma. They'll give you an idea of the cards that you're most likely to be approved. And you may start out with these really low limits, but it doesn't matter. It's going to build your credit. Build your credit. Get out of the 5s into the 6s, and then have a plan to get to 700. 700 or better. That's where you want to be. It's going to make your life so much easier when it comes to renting, and eventually when it comes to buying your first house or your third house. Doesn't matter. All right, where can I learn more? So I put this video out to gauge interest. If you find this video was helpful, if you want me to dig into it a little more deeply, I definitely can. This is really just scratching the surface. Just made a couple slides with some of the more common questions and answers, but you know, I can make a whole series of videos pertaining to this, and you know, how don't just get into the specifics more. But if you want to learn more, you can always email me or visit my Facebook page, or even give me a call or a text, which is fine. So a little bit more about me. My name's Timothy Smith. I've been in real estate or mortgages since about 2000, almost 20 years in the Chicago area. And my cell phone is 773-357-7733. So if you have any problems with credit, or you just want to check, like, is this guy being legit? Is this landlord, you know, are they being on the level, or, you know, what can I do? Are there compensating factors? Anything to do with credit, just shoot me a text or give me a call at that number. Also, you can go to my Facebook page, facebook.com/chicago.leasing. I usually respond within at least like an hour or maybe less. Just hit me up, message me there. And then if you want to follow me on Instagram, I'm at windycity.apartments, and then I've got a YouTube channel, Chicago Apartments. Actually, that's probably where you'll end up seeing this video. That's probably where I'm going to place it first, and maybe just put it on some of my other channels. But hopefully this helps. Again, it's just scratching the surface when it comes to renting and credit and what you need to do and how to protect yourself, how to build that credit, and how to make sure that you secure the best apartment that you can afford. Um, you are a credit score. I'm sorry to tell you, you are a credit score because they don't know you. Before they get to know you, they're going to see a number, and they're going to base that approval, quite a bit on that credit score. If not, like, it's the first thing we see, guys. It's the first thing that pops up, and if it's a 720, it's a relief. If it's a 520, it's just an automatic denial, and you lose your application fee and any other stuff you might have put down. And again, I've heard nightmare stories where people lose more than their application fee. So don't let them do that. But I have heard that before. Anyhow, thanks for watching. Please comment, like, and share. I'd love to hear what you guys think. And let me know if you want to see more videos about renting, about credit, about anything to do with renting in Chicago, and how your credit might affect your approvals. We can go into renter's insurance, move fees, all that stuff. But I wanted to see if there was enough people that were interested in getting a little bit more information in terms of credit. So thank you very much. Please subscribe, like, make some comments so I can know what you guys are thinking. So thank you very much. Thanks for watching. Have a great day.